Big news out there with Hong Kong's ETF looming just a few more days, and we will know the fate of Bitcoin, Ethereum, and a lot of how these world markets are going to react. My name is Paul Barron. Welcome back into Tech Path. Today's breakdown is going to be all of that. We're going to get into really what to look for, and there's also some very alarming trends that you do not want to miss today if you're investing, so stay tuned for that. Before we get started, I want to thank our sponsor, Tangem. This is the best way to get into self-custody. A self-custody wallet is one of the tools out there. If you're brand new to crypto, what I ask you to do is this is one of the easiest to take advantage of, one of the most, I would say, most secure, and also it's also very inexpensive too. You guys can, of course, jump over here to Tangem. Get your wallet. This is a card. It works in conjunction with an app that is super simple and very slick. You can do some swaps in it. You can just send your tokens in and out of it, and of course, get them off your exchanges. Check out Tangem down below. Get the 3-card set. That's the one you want. All right, let's get into it. Couple of points happening right now. People are running for the doors, and that is Fidelity Bitcoin ETF bleeds millions for the first time. We are now in a corrected state for what has been the bull run of Bitcoin, especially around these ETFs. And we're talking about BlackRock ETFs, Fidelity ETFs, ARK ETFs. All of these have really started to see some downturns here. Of course, Fidelity's record outflow comes after BlackRock's fell out of favor on Wednesday, breaking their 71-day inflow streak, posting a zero flow. 7 of the other 10 also followed IBIT's lead with recorded zero inflows as well. So it's pretty much on everybody. There's the kind of chart right there that everybody was looking at there on the 24th of April. Zeros across the board and starting to go into the negatives here, which is the big one right now because we haven't seen those kind of numbers before. What does that mean for the markets? Well, it means sideways action right now, downward trends on both Bitcoin, Ethereum, sentiment starting to fall across the markets. Things are going crazy for sure. Digital Asset Fund Manager survey is in. There's a few points I want to hit on here. One is 41% of investors still believing that it's the most compelling growth outlook, meaning crypto, overall. And you look at it, Bitcoin's still number one, ETH, Solana, Polkadot, handful of others, Cardano's in there. And then a few others, XRP not even showing up on the charts right there. Right here in terms of current portfolio positionings, mostly equity and fixed income, but digital assets starting to climb a little bit. And then further in here, digital assets weighting in portfolios rose again from 1.3 to 3. That's good because I think this number is going to be in the line of around 5 to 10% in the coming years, especially as we get into some of the trends that we're watching right now on today's episode. So which digital assets have they invested into? This is the prior survey, these black diamonds right there. So you can kind of see ETH down a little bit from previous, almost everything down except for some multi-assets. Solana way up, and of course Polkadot down slightly, Cardano about the same. XRP fell off the charts dramatically, so that's a big deal. Exposure to altcoins, a potential here. Solana, of course, seeing the dramatic increase in allocation. So what does this mean? It means that we are seeing, I think, an interesting shift across digital assets. One, this is just the beginning, and it's also, most of these assets are the ones that are getting out there a little bit more available in terms of awareness and the hype cycles, all those kind of things. And remember, new people coming into the space are going to be looking in this category. Sure, they're going to buy Bitcoin. Yes, they're going to buy some Ethereum. They're going to go shopping right after that into altcoins and meme coins, and those are the ones to watch. Back to this report, despite the rises in since January, an increasing number of investors see digital assets as a good value. This, I think, is going to be a big deal. You can kind of see regulation as the primary scenario in terms of what they think is going to prevent them from getting into digital assets, and it's going up versus the previous. The other thing is corporate restrictions. This is going up dramatically, volatility pretty much the same. Everything else dropping a little bit, so that's good. When you look at accessibility, custody concerns dropping dramatically, that's good because I think people are now figuring out self-custody in some other ways. So good stuff here, I think, overall. The good thing is this is good news in general. But when you look at the macro side of things and really the rest of the market, this is where it gets a little bit unknown. So sinking Bitcoin ETF flow, this is pretty much the impact that we're talking about Bitcoin moving to 70K. This is kind of the scenario that we are facing right now. Supply could meet demand. longer period. Many people looking at this decline in demand was also apparent in the steep drop in accumulation addresses since late March. We know why that's happening. Accumulation addresses are those who have had a history of only buying Bitcoin, but no history of selling Bitcoin. So interesting, people waiting for what? Waiting for those dips. ETFs also absorb Bitcoin back to their shares, came under this category. That's the other reason. Another point is that I think a lot of people, and this is really kind of our video today, is that after the Hong Kong ETF launch, we can expect, many people were saying we could expect some big movement around and have similarities to that of what we saw in January for Bitcoin. So could push it to maybe an all-time high in the coming months. We'll see all of this. Now, I think that we are going to see something different in Hong Kong. And we have a thesis that we're going to paint out for you here. So make sure you tune in right now, smash the like button, and give us some love. Subscribe to the channel. If you're brand new to crypto, this is the place you want to be to learn about blockchain. I want to go to a clip, and this clip is going to explain a little bit more around the ETF secret feature in Hong Kong. Watch.
Yeah.
Especially when you look at what's happened in the United States, it took 10 years to get an approval for this exact same product. And you're saying over in Hong Kong, it's only been a 4-month journey.
Absolutely. It really has been mind-boggling. It really is sort of unprecedented speed. You know, we are talking about also unprecedented infrastructure that have actually been built over this very, very short space of time. So for a Bitcoin product, this means potentially some of the investors can actually give Bitcoin to the fund as their subscription proceeds in return for shares or units in the fund, and they can redeem the same way. And that is actually quite a groundbreaking feature that we know in the US products that feature is not supportable. And these products going live also imply that they have lined up sufficient market makers to actually support the liquidity for the products when they launch as well. So it is actually quite a massive undertaking.
So he hit on two things. One, of course, is the ability to use Bitcoin inside these funds. Imagine if you had a whole bunch of Bitcoin and you want to go into an ETF. This is one of the features that we do not have currently in ETFs here in the United States. The other thing he talked about was this massive infrastructure that has been building. Remember, we're faced with regulation, pushback, constant hits from DC, all this, FUD that's pushing these markets down. And yet at the same time, you have BlackRock and Fidelity flying, or at least until here recently. But in Hong Kong and in Asia, what we're finding is they've embraced crypto. They've embraced blockchain, meaning maybe they've actually laid the groundwork for a supremely successful launch of both a Bitcoin and an ETF for Ethereum. So be on the lookout, guys. We are going to see some interesting things. Here's the ETF marketing focus as well. This goes into a little bit about how they're taking it to market. Listen in.
I think the market has spoken. There is definitely a lot of interest in an Ether product. And the managers are well aware of that. Everyone knows there will be huge pressure on cost. There'll be huge pressure on pricing. And one of the obvious answers is, well, if the ETH product hasn't launched in the US, then you shift your focus to that part of the race as well, to make sure that the Hong Kong managers and the Hong Kong market will at least have some edge in this race. If you're only doing one product, which is already in a bit of a tight squeeze around the world, the margins are going to be squeezed. So definitely being able to hit the market with a first would certainly help the managers get a bit more of an edge, and also give them a bit more of a chance to recoup on their investments.
Some of the biggest investors in the world are going to be looking at Hong Kong, and they're going to be looking at these Ethereum ETFs. I think Ethereum may end up surprising all of us in terms of how it comes out of the gate. And if it does in fact do that, then it could set the tone and the potential for the rest of the markets around the world to say, wait a minute, this is really one of the bigger plays here. So we're going to be watching this super closely. Here's Wu Blockchain talking about the Hong Kong SFC. These are the tokens that are compliant exchanges which will allow retail investors to purchase, must be included in the 2 indexes. The following may be included. And I want to jump into the chart here. Most of the indexes right now, 5 for Bitcoin, ETH, Litecoin has 4, Cash has 3, Polkadot, and then Solana has 3. Here's Cardano and Avalanche. Polygon. These most likely will start to be listed. So we could see a little bit of pump potential there with Avalanche and Polygon as this starts to open up into the markets. Remember Hashkey, and we've shown this multiple times, one of the major exchanges that will be launching and has launched already. They have always been about Avalanche, and Avalanche has tremendous liquidity there, which is one of the biggest things that they're looking for in Hong Kong is those kinds of liquidity features. Avalanche is one of those that could benefit in a big way. So could we see another spike running on Avalanche, especially with Hong Kong launching next week? So still a lot happening. One thing to look at is, this is OSL, all right? Now this is the analyst that we just watched 2 clips of. And he's breaking down all of what their fund managers are looking at. And if you start to look at some of these markets, you're going to notice something that's interesting, both on U.S. markets, Bitcoin markets, the Hong Kong dollar market, etc. And that is XRP is going to be in there in trading pair with Hong Kong dollar, along with ETH and, of course, Bitcoin. So we could see some movement as well with XRP flying into these markets as we go. Now, let's not forget that Canada was one of the OGs in bringing ETFs to market. Canada bets big on crypto. 40% of institutions now are investing. 40% of institutions now investing in the Canadian crypto ETFs. So that's a big deal looking at this. This is a sharp increase, up from 31% just 2 years prior. Survey also found that 1/3 of participating institutions had placed at least 10% of their assets in crypto. These guys are gamblers. They're going for it. I like it. The other thing is their diversification here. So now they're starting to no longer putting all their eggs in one Bitcoin basket. Guess what? I think that's what we're going to continue to see. Their direct ownership of crypto assets remain popular, with 75% of crypto exposed institutions holding them directly. That's a good deal. And then, of course, a growing number seeking exposure through alternative avenues. Let's just say the word Ethereum. That's going to be the one to watch. So that's good news, I think, overall. I want to go to another clip here, because this is where it gets to a point that you, if you're watching and you're under the age of 35, you need to pay attention right now, because there are some serious things happening in the US, and I think globally, that is pushing a lot of our youth to new investing strategies. I want to play this clip from Scott Galloway. Listen.
We are purposely transferring more wealth from the poor and middle class and the upper class to the super rich, and from young to old.
And you say in the book, which is true and alarming, but let's say a 30-year-old American in America right now is doing no better than his or her parents. Then that's a new thing in American history, that you would think over time, we want to do better than the next generation, than the last generation. It's not happening anymore.
For the first time in our nation's history, a 30-year-old man or woman isn't doing as well as his or her parents were at 30. That is the social compact breaking down. People aged 30 to 34, 60% of them in 1990 had one child. Now it's 27%. People are opting out of America. They're not optimistic about it. They're not having kids. So we have a real issue. Young people are enraged. So it turns every cut, every movement into an opportunistic infection, because quite frankly, they are just pissed off.
So not a great analysis, and look at the potential here for future, but there is a silver lining here, and that is that there's an alternative asset out there that can start to leverage against what we've seen in terms of inflation. So one of the things he was hitting on is that ratio of earnings to mortgage size has doubled in the last 30 years, simply meaning you can buy half of what you could 30 years ago, and that's one of the bigger factors around homes. Further into this, you're going to see buying a home tougher. It's easier to repay your mortgage, so that was a problem. And I think the other thing that we're looking at is this right here. Now we're continuing to see less of a family unit. And when you have less of a family unit, you don't have that initial response to go out and, one, figure out for the future. This starts to, put people on the sidelines a lot more. Now, there are some opportunities here. This is not completely negative, because I think now that we know these things are happening, if you're a young person, then you can fix them. That's the beautiful part of this. And what we're going to see happening in Hong Kong, I think, is going to open up the eyes to a lot of people worldwide, including the United States, maybe in other countries, especially in other countries, of where this is going. So big deal. Other things to be watching, big giant buy signal right here. Crypto whales are continuing to transfer another 1.3 billion. Well, guess what? They know what's up. We're going to see some potential opportunities. USDC is moving on to exchanges. This is a buy signal, and this is one of those things that we are going to be closely watching. So 5 transfers totaling 1.3 bill, amounts ranging from 150 million to 350 million were all made to Coinbase on April 25th. So could we be in line for a little bit of a dip and then a pump, or do they see something happening with Hong Kong that could move the global markets going forward? There's so much happening here, guys. You need to stay tuned and in on this. And if you're brand new to our show, make sure and smash the like button right now and subscribe to the channel. If you're under the age of 35, this is the one thing you should be focused on, is how to get into investment classes that can outpace inflation and outpace your wage growth. Those are the key things that you have to get back to. And what Galloway was talking is that basically their income is coming from jobs, not from putting their money to work. That's the thing you've got to learn, is get your money to work. All right. If you're not tuned into the show and already in our Diamond Circle, make sure and get in very easily. Just click our link down below. Follow me on X, @Paul Barron. We'll catch you next time right here on TechPath.